Let's welcome on board Satyanarayana Raju, the MD and CEO at Canara Bank, talk about their numbers. Mr. Narayan, great to have you on the show. You've guided for a loan growth of 10% in an environment where the system is growing at 15% plus. You are well capitalized with a good CD ratio. Why not aim to grow more aggressively?
The last year, when you look at that, our guidance to the market was around 8.3%. Whereas, so we have grown a double-digit growth. Even a domestic credit has grown around 15%. The same thing this year also we reflect in our working. We have taken that guidance is based on that various factors and all those things. It's a minimum. What we projected is only a barest minimum of 10.5%. But when it comes for the reality and the results, definitely we are confident that the growth will be much better.
Right. You're growing at 20% plus in agri as well as the corporate segments. Would you continue to see strong opportunities there or look for stronger growth in retail, say, in this fiscal?
Retail, actually, we are looking at a much better growth in the current financial year. Our housing loan has grown at 14.6%. But overall, with the push of the housing loan only, our retail has grown at a double digit. But this time, we are focused on not only the housing loan, various other products of retail, like a vehicle loan, educational loan, and a personal loan. There is a Canara budget scheme also we have introduced. We initiated several new initiatives to attract the customers. We have brought our pricing and various other onboarding features at par with the market, and we are going very aggressively on that. And we look forward for from the 10.9 to around 13 to 14% growth in the retail growth. So that's the growth rate what we are looking at this year. And agriculture and corporate, the strength is our strength is that, and it will continue to grow beyond our expectations only. The last year, if you look at the corporate, our corporate growth domestically, if you look at it, it is around 17%. When you look include the overseas exposure, that's across 20% because of that some oil companies exposure for short-term loan. But the domestically we have grown around 17 to 18%. This time also we are seeing the same traction. First last 1 month we had already several committee meetings for sanctions. We have communicated several sanctions. We are seeing a lot of traction there. And agriculture and allied activities, since the 59% of our outlets, branch outlets, are located in rural and semi-urban, that's the strong base of the Canara Bank, and we continue to perform there the same rates, approximately.
Interest expenses have gone faster than the interest income in Q4. Despite that, you expect NIMs to rise in FY24. What gives you this confidence?
The reason is, one is the deposit side, one is an asset side, sir. The deposit side, the term deposits, whatever it has done, when the interest rate regime is the highest interest rate regime, the customer depositor will have an option to switch over to the new interest rate or the next day itself. There is no bar that he has to continue with his existing contract. He can prematurely close, he can reinvest his money in the higher yielding deposit receipts. Accordingly, that's based on that comfort of the depositors. So depositors in our bank also, generally our more than 90% of deposits are less than 1 year. 1 year and 1 year bucket only, the deposits are there. These deposits, 90% of these deposits already been repriced in the higher rate of interest, either it is 666 or it is a 400 scheme or it's a the 444 scheme. So there, the chances of again increase in the interest rates, the deposits, is a very limited chance. So whatever this entire quarter we have seen that the interest expenses, it has reached to a peak level. So it may continue at that level unless otherwise the market is comes down in that rate of interest. But when it comes for that assets, asset side, our 49% of total loan book is under MCLR. This MCLR loan book will be resetting only on a majority on annual basis. So still a 40% of this 49%, that's approximately 1.5 lakh to 1,60,000 crores will come to us for resetting at a higher price. So that is a cushion what we are having on that. So that will help us in maintaining that above NIM of above 3.05%. So you can look at that. Even December we maintained that 3.05, and the March again we have recorded even under the such high volumes of the term deposits which we procured at high cost in the October and October to December quarter, that still we could manage at 3.07.
Talk to us about recoveries, and it has contributed meaningfully you through FY23. Where should one see FY24 in the medium term?
No, actually, we are given our that just look at that our gross NPA and net NPA in absolute numbers as well as in the percentage. The fourth quarter has seen a visible improvement in that. The first 9 months absolute numbers we could reduce it around approximately 5,500 crores. But whereas in the fourth quarter itself we have reduced 4,000 crores. That has given us comfort to reduce that the gross NPA from 5.89 to 5.35%. The same thing in the net NPA also. Net NPA itself in absolute numbers, in the first 9 months, we could reduce 2,600 crores, whereas in the fourth quarter itself, we reduced almost again 1,600 crores. That has helped us in reducing that 1.96 to 1.73. Anyhow, our provision coverage ratio of whatever our call that every quarter, at least we should ensure that 100 basis points improvement in that PCR has continued, and it has given us a comfort of 87.31%. We have given our guidance in the last our investors slides. There we are clearly told that our gross NPA this financial year we want to bring it to around 4.5%. This is conservatively we are taken, but we are confident of showing much better results.
Mr. Raju, hi. Let's get a sense from you from the MSME growth, because that has been slow for FY23. Any more stress that you're anticipating?
We have reviewed our area-wise products. All brought it that modifications and made it a market competitive. The second one is our existing travel or processing, the small ticket size, everything has been digitized, and now it is a rule-based engine only. Through them, they can do these things. One is you can ensure the underwriting standards. Second one, you can address the TAT. And with we have also further strengthened our 163 SME Sulabs. And there is a special focus has been given to them for encouraging that individual that Sulabh should create that area a dominant product. We are working on that, and they are taking several initiatives. And even the last one quarter, I have seen that our total sanctions of these SME Sulabhs have crossed more than 10,000 crores. That's the jump what we are getting it. Partly we are dispersed it. The remaining partly we are dispersing in the current quarter. And again, this quarter also we are expecting that these Sulabhs will come out with a successful sanctions of more than 10,000 crores. That's the way we want to grow, sir. But this time, definitely we want to grow at more than 8%. But we would like to see that the 10% growth in that MSME sector.
Yes, indeed, 10% growth is the aim. And finally, you've been newly appointed as the MD and CEO for the next 3 years. So what is the outlook in terms of the key metrics? Where would you like to see credit costs, ROAs, NPA ratios, etc.?
Actually, that's we had a recently, fortunately, we had a board strategy meet, and thoroughly this was discussed 2 days, and we have freezed certain numbers for next 3 years. That numbers, few numbers I can share it, because still it is at the freezing stage, because we have to discuss with our field functionaries, circles and regional heads before freezing that. And especially certain where there's a gross NPA, it should be below 3%, net NPA below, it should be below 1%. These are all the standard things. What we are taken is the return on equity should be more than 20%, and the return on average asset should be always it's more than 1%. These are all the actually the many such initiatives have been taken. Once we have freezed that in the our internally, then we will share with you, sir. But we look at that the growth rate will continue at a double digit for the next 3 years in the business as well as in the credit.
All right, now appreciate your time, Mr. Raju, and thank you for joining us.